Welcome to the Trending Tokens podcast with Jake Vale and Jeff Pulver. Jake is a marketing consultant for T0 and consults in the security token space. Jeff Pulver is an internet pioneer known for his work in VoIP and has invested in more than 400 blockchain startups and shares his knowledge through a program called the Pulver Edge. All opinions on trending tokens are the opinions of Jake, Jeff, and the guests. Nothing should be taken as legal or trading advice. The content of this podcast is for informational and educational purposes only. On episode 2, we discussed the SEC Fintech Forum held on May 31st, the near-term outlook for security tokens and security token offerings, and finally touch on the Kik/Kin lawsuit. We hope you enjoy the show.
Hi, it's Jeff Pulver, together with
Jake Vale and Trending Tokens.
This is episode 2. So we were just talking about the state of trending tokens and whether or not security tokens are trending anywhere right now, and what is the trend and where are they going? From my side, it's both an opportunity and a risk, and then there's a very big opportunity and a very big risk, and so there's a lot of people on the sidelines waiting for something big to happen. I think it's one of those cases where most people in the know believe that digital securities are their future. They are the future, but it's not necessarily a today thing. It's more like a tomorrow thing. And when does tomorrow start? Does it start literally tomorrow, or is it sometime in 2022? And it's a big question mark.
When the SEC came out and they were asking questions during the Fintech Forum, a lot of the focus was on people that have done ICOs in the past and how they can sort of get into the good graces of the SEC and anyone else who they're open to regulation from. And a lot of what we're seeing is the SEC and other organizations coming out and saying, if you think you have a utility token, but no one is using the token, and there's no ecosystem where the token has utility, and you used it to raise money for a crowdfunding type situation, then you are going to be having a security token and not a utility token.
There's a lot of conversations that took place back in September. I was very honored to have the opportunity to take part in a forum that my friend Kevin Rohrbach at the University of Pennsylvania hosted in September. And we had the right representatives from the SEC, from FINRA, from FinCEN, and it was really and DOJ, and it was a really interesting, enlightening conversation. While we were covering regulatory policy, I was trying to make a distinction between two types of security tokens: ICOs that went bad, that were deemed a security by the SEC because they went bad, versus instruments that were created for the sole purpose of following and being compliant with a future Digital Securities Act, of course, one that doesn't exist yet. But an instrument that came into life knowing it was going to be regulated by the SEC with the intention to be a Reg D, a Reg S, perhaps Reg A, Reg A Plus offering. Perhaps it was a Reg CF. But in terms of being totally compliant with the understanding of the law without having to interpret much, and that I think that it really hurts our industry by taking an ICO that went bad and say, okay, now you're security, now you pay your penalties because you're a security, versus somebody who spent the past 18 months working with somebody, creating an instrument that could never exist in the past, but thanks to the innovations with smart contracts, thanks to the innovations with blockchain, we can now envision a whole new capital markets ecosystem, perhaps influenced by breakthroughs in crypto, but truly unique capital markets infrastructures. And so today, when I look back and I think about conversations about, oh, you're a security. Now, clearly, if you are on the street corner and you're selling something that was an ICO and you're making promises to the public that you buy this ICO because next Tuesday it's going to go up in value, sure, you're selling a security. Call it an ICO, call it what you want. I think the biggest problem the original gangsters of ICOs had is in their naming conventions. You see, back in the day, there was a concept where you could pre-sell a product, whether you're selling widgets, whether you're selling garments, you're selling a scarf, you're selling a next generation watch, or perhaps an amazing podcasting studio. People were prepaying and allowed to prepay for products in the future. And sites like Kickstarter, Indiegogo raised a ton of money for entrepreneurs and people who were trying to build a project. And if an ICO actually stood for Internet Crowd Offering, where we had the opportunity to share a business plan, share our vision, share our ideas, and say that we are raising equity for our business and we're trying to fuel it, and that in this future, there will be apps that we create, there will be reasons what we're doing, and we're totally transparent. A totally different world. There's so many ICOs that are out there that are afraid to be transparent to their public, perhaps because they don't have a public, and perhaps they don't want to draw attention to themselves. But if we wanted to actually clear the mess and start from scratch, I'm someone who believes that in the era of the internet, we've had a lot of accidental consequences, the unintentional consequences of law. And one of the unintentional consequences has been the opportunity to create value from where there was nothing, that we now live with network effect. And frankly, I do believe that there are types of tokens, which we today call utility tokens, because we're trying to distinguish between being a regulated security. But there are economies that will evolve that truly make total sense, because something is not a security, but it was born on the internet. Let's remember, the SEC was not born on the internet, and so its rules and lives inside of boxes. And there will be a conversation that the regulators are there to enforce the laws. Perhaps in the U.S., the Congress is responsible to create the law. SEC enforces, but if there's a gray area, unfortunately, in some cases, you wait till they go to the Supreme Court, and then there's a ruling that explains things. But that takes years, lifetimes in the internet, certainly lifetimes in the world of blockchain and crypto. And so, what do we do in the interim? Will there be a Digital Securities Act of 2021? Probably not. The Crowdfunding Act, at least the ability to do the Jobs Act, which gave, I would call the Crowdfunding Act, it gave us the opportunity to at least think differently, think outside the box in the era of the internet. So we're not necessarily only looking at 1933, 1934, 1940, but we could look at rules and regulations, how it affects us. But in practical terms, I believe in innovation and opportunity. I believe that there are ways to do things that are not against the law, that at the same time are creative, and there are boundaries. And if we were to set an intention and purpose not to break the law, but to extend our critical thinking beyond the way things have been, I think we will find us in an era where we can create what will be known as utility tokens, where there's a true economy that evolves, that the internet gave us the opportunity to do things in advance. And it's we've lived with the ability to go to Chuck E. Cheese and to play with games forever. We've been gone. How often do you go to an arcade and you play skee ball and you get paper tokens? And you get gifts that are truly not valued at the relatively indication of value based on the paper tokens, winnings. There's a token economy that goes way back, but when talking about the internet and disruption and disruptive positive change, it's a whole different conversation. And to keep our critical thinking on a regulatory policy in a framework that's boxed, whether or not something is a security token or not, or I should say a security or not, it takes away from the upside of where we go. I do believe that it's inevitable that we go digital. Every industry since the third industrial revolution has found ways to go digital from analog. The fourth industrial revolution that's being driven by innovations in blockchain will be sure to affect finance, and there's no going back. I think that it's inevitable that everything goes digital, whether it's what today we understand as equity and debt, what we understand as different types of financial contracts and obligations. The timing of, though, it's going to change, but there's no doubt that there will be regulated security exchanges that are for digital assets in the future, not only in America, but in places like Mauritius and Bermuda. And if the Americans are not careful, there will be a shift where the money will move away from the money center of New York City, the money center of the United States, and you will find a lot more deals being originated in places like Bermuda, like Mauritius, like Singapore, like Gibraltar, places which offer entrepreneurs the opportunity to issue in a regulated regime and for people to follow the law. And it's an issue. I mean, the ICO world unfortunately had a lot of fraud. As someone who's invested in many startups, the one thing I never really thought about was, are these entrepreneurs defrauding me? Are they truly not going to go out and follow their dream and make their dream happen? And when a company has failed, did they fail me or themselves? And what is failure? Is failure just because of the timing or because they were out never really to do what they said to do and they were going to do something else?
It's funny that you mentioned that, Jeff. A big part of the FinTech Forum, they were discussing the disclosures that are required in these initial offer memorandums that were going out with ICOs, and there were some points that they were making of things that hadn't been thought of in the past. For example, does the code that's mentioned in the white paper match the code that's actually what was produced by the project? And because a lot of people aren't sophisticated enough to know whether or not the semantics of the code matches the actual function of the code, they wanted to have some kind of a standardization where code can be explained in layman terms to people and they can understand whether or not a project is hitting milestones, whether or not they've wasted a lot of their money, and all these other sort of things that, the updates that people were enjoying getting from Telegram from these people who were running ICOs that all of a sudden stopped when they realized they might be issuing securities. People do want that information. And I think that the next step before we see guidelines for the actual issuance of securities and maybe rule changes, I think that we'll see guidelines on the disclosure requirements on the marketing side.
Well, we could talk about best practices and what's practical. And let's say if there were 10 projects presented to me, 3 of them were actually startups looking to raise money because they don't know anything about security tokens or utility tokens. They're just looking to raise $500,000 to fund their dream. So there are 3 of those, and 7 others are going through the ICO, IEO route today. Who do I invest in? What's interesting to me? And it comes down, for my purposes, it comes down to team, comes down to the vision, and who's most likely going to succeed. And the thing is, in all my investments, and I've made more than a quarter of them overseas, I never had to go to any regulatory authority because I was defrauded. Because it turns out in startup life, we pivot all the time. That on a Monday, I think I'm doing product X. By next Friday, I'm doing product Y, and 3 months from now, I'm on product Z. And if you see any company that's ever been through the incubator accelerator project, they realize, and you realize if you're mentoring them, that they have a great team, wonderful energy, just like a rock band. They're going to make a great sound. But where they find their stride is something completely different because they happen to be perfect for that and not so perfect in where they're going into. And so, as an investor, I allow and encourage people to find themselves, to find their voice, to find what they're doing. And it's just not fair to me to think, gee, we're not allowed to pivot. That if I created a white paper that attracted the investors, why not go back to the investors and say, this is what we're now doing. Would you like, and provide transparency, as a startup. I never saw my client, my investments share with me their bank statements. I never asked them for financial statements, but when they were doing well, I found out because they're doing another round of funding. And sometimes I had an opportunity to join. Sometimes I didn't. Sometimes the actual structure of what my investment was changed because a very aggressive VC got involved and they changed my class of stock. But in every case, I had some idea that the company was still alive. They had a heartbeat. Perhaps they had a website. And I do think it would help every project out there to be accountable to themselves, to their team, and certainly to the token holders, at least the initial token holders. And we can come up, I think, with best practices and recommendations on what to do, because that will at least allow us to look for companies which are not following that. So if I had 10 investments, 10 investment opportunities where I'm sitting down with 10 different companies looking at their projects, I would look at every one on the same set of eyes as far as who do I think is going to be successful and why. And then secondarily, I look at what the return could be. And, the companies that are straight equity investments, I might say, hey, why don't you consider doing X or Y? But this is after you raise the money. And of the 7 that are looking to do other things, I will ask them which of these companies will be on a quarterly basis, semi-annual basis, annual basis, sharing with us their bank statements, at least their year-end statements, some sort of accounting for the year, who's going to give us monthly updates or quarterly, or some sort of updates on some frequency. Because the companies that are willing to be more open and commit upfront to sharing things, being proactive, are more interesting to me. I'm not suggesting that people who don't disclose have anything to hide, but it makes a much more attractive investment if I know I'm working with people that are willing to share. And just because they don't have to doesn't mean they shouldn't. and if they want to be a more attractive token. And as far as the token economics go, just like your businesses shift, so do the economics. And if you want comedy, you could read some of the white papers from 2017, 2016. It's comedy if you read it in one way. It's just funny stuff. Science fiction, and that's of course fraudulent in my ways. I mean, there's a lot of projects that I think had a speed of light issue, that they were talking about transaction size and speeds that were just not reachable yet. We don't have quantum computing just yet, and I don't think these people had any access to it. So it was sort of an extreme case of what's silly. In terms of the opportunities, most of them are unbounded. And I think that we need to, as an investor community at least, consider those investments we're interested in, those we're not. I am not suggesting that Main Street, that the unaccredited investor community should be involved in any of these. That, as an accredited investor, I take risks. I know it. And most of the time when I write a check, I don't assume I'm getting any money back. Because if I did worry about that, I would not be making an investment. And that's the big thing, is that I understand the SEC and every regulatory authority has to look out for Main Street. They want to make sure that someone is not losing their home over this, that they're not losing their life savings over this. And we have to be careful and respectful of that completely. And at the same time, in the dawn of this new era of finance, I do think it behooves all of us to find a pathway for this in this really truly early technology and thinking to come forward, because we're truly at a nascent state of the future of finance. And it may be a transitional year of 5 years or 10 years. It's not going to be 3 months. And that we will transition into this new world where new types of instruments are just commonplace, and that companies that were born on the internet will have to be compliant. And don't worry, think about just the SEC. You also have issues with other in the United States anyway. You have the FTC, and there are reasons. And then of course you have, if you're dealing with utilities, literally power companies, or you're dealing with communication companies, you have all sorts of other state and local compliance issues to deal with as well. So it's not just financial. We need to be compliant, because there are reasons why these laws exist, and ignorance of the law is no excuse. But sometimes as a policymaker, at least you want to understand from the entrepreneur's perspective what their intentions were, what their purpose is, so that you could find common ground and figure things out. What's at risk is if we look at every offering from 2017 and we only focus on that for enforcement purposes, 2019 never happens, 2020 never happens. And I happen to believe in the virtues of digital securities. I think that it makes complete sense for a municipality to issue a bond so they could raise money for public works. But perhaps if they can incentivize the residents that if they invest in a bond, they can get extra benefits like free parking, attendance, free access to certain museums, free access to certain events. And that becomes a security token offering. That's basically a digital security issued by a municipality for the benefit of the residents of a town, a city, or a county, or even the state. And those are better benefit. Those are in addition to tax incentives like tax-free interest and stuff. And so we're only really bound by our imagination, coupled with the reality of regulation. But it is a brave new world. I remain absolutely positive about the future of where this is, but the timing, it's not a tomorrow. It's a tomorrow's tomorrow.
Something everyone always forgets is that the summer is terrible for investments. Any kind of investing, whether you're trying to raise money, whether you're trying to generate leads for people who want to do gold IRA rollovers, the summertime is dead for about 3 months. And I think that a lot of people that are thinking that they're about to see a lot of trading on their security tokens as exchanges come online and as more token protocols sort of get implemented into the different exchanges, I think that it's going to be what you said, a lot more time before we start seeing the kind of trading that you'd see if you log in your Charles Schwab account or your E-Trade account. It's going to take a lot of time before the retail investors start getting involved in these projects. A year after the security token closes, at least for the T0 offering, a retail trader could technically be purchasing that token, but that's going to be different for every project. And depending on how they were structured, could be shorter periods of time or longer periods of time. And I don't know that there's as much interest among general retail investors in security tokens currently as there are among the sort of accredited people or the people that are involved in the cryptocurrency space in general. They sort of have a political persuasion that makes them more predisposed to invest in something that they see could, disrupt technology or change the way that the financial markets work. And I don't think that that's something that general retail investors are as interested in currently, or maybe don't know that there's a problem with the markets.
There's also mindset and, of course, reality. And T0, they decided, I believe, to empower accredited investors to trade with each other because it's allowed under the law. So that if you were a accredited investor that had invested in the T0 security token offering, I believe through what's currently available, you were able to, if you happen to be an accredited investor, you can purchase their tokens. But there's a limited number of accredited investors that I believe their broker dealer has brought together, and the market is thin. It trades thinly. I actually don't believe that that's actually any indication whatsoever in terms of the interest in where T0 is or is going. But due to the market factors of how this came to market, and due to the reality that there are just some people who will not let go of their positions and other people wanted to let go, it's not a very liquid market. There's very little liquidity right now because the accredited investors are tied up and not enough other accredited investors have shown interest. Now, whether or not when unaccredited investors can come in on the retail side, will they have worldwide distribution and have billions of people coming together to buy their tokens? Probably not. We're talking about a very sophisticated company with a very sophisticated mindset, incredibly intelligent group of people working together to build an industry that they are pioneering. And so in the beginning, it's going to be communication. It's going to be about being understood. And if you're not doing simple and something that's easily understandable, it's going to be challenging. And anyone who's thinking about launching a security token today, let's just say a security token exchange, they're thinking about liquidity. They're thinking about what other instruments are they going to list, and it gets complicated really, really fast. And when most of the, as far as I know, most of the security token offerings that happened in 2018 were Reg D or Reg S. That meant there was a 1-year lockup. Actually, the Reg S, I guess, gave you 90 days if you're a foreign investor, but for practical purposes, the Reg D was a 1-year lockup. I believe that it's more interesting if you were an investor in other types of funding opportunities.
Yeah, also very risky for the Reg D investors, not knowing during the STO, not knowing whether or not the company was going to allow trading as soon as possible or set some kind of trading guidelines. T0 ended up scheduling it so that the Reg D and Reg S were able to trade at the same time 6 months after the close of the security token offering. It could have been that only the Reg S people were trading 90 days into it, and that the entire Reg D audience, which was a little bit more than there was from Reg S, was sitting there waiting to trade, up until possibly even an entire year, depending on the interpretation of the law.
But unfortunately for the market, does not seem like there was a lot of demand.
No, and there wasn't even demand from people that got in on the deal. That there wasn't demand from them to be on a platform and be able to trade. A lot of these people bought to hold it for a long time, and they weren't planning on day-to-day trading. So there's a lot of sort of caveats, I guess, in the exchange space.
But now that's actually a positive, in my opinion, because they may have been able to attract long-term investors with a 5-year investment horizon, a 7-year investment horizon, and not a 3-day investment horizon. There's a very big difference I've discovered between quote unquote crypto traders and securities traders and people who are from funds who actually who take long-term positions in things where it's not buy and dump, it's buy and hold. And so there's, to the extent that T0 is really a milestone event where for the very first time it attracted investors that could be attributed to hedge funds and financial institutions, which are not in it for the short term, but look in it for the medium to long term. That's a great thing. And the fact is that we will only see over time who was right, where the opportunities truly were, and whether or not the evolution of T0's offering encourages other companies of their size and large.
I'd almost like to see what you're talking about, different types of bond offerings from cities and that kind of thing coming on. I think it would be a lot more interesting to a lot more people rather than seeing 100 different commercial real estate projects come on at the same time.
Well, look, it's municipalities, it's a lot of people don't like selling to cities because they think it's quote unquote boring. Early in my life, I had a company called Spreadsheet Solutions, and I'm formerly an expert in fixed income mathematics. And I spent a lot of my time. So what I did is I wrote at functions for those people who know what at functions are for both Excel and at the time Lotus 123. And I helped people in the treasury departments of municipalities and states do portfolio management. I also worked with many financial institutions around the world. And I had a marketing deal once with Telerate, which is now part of Reuters, but I ended up in 675 financial institutions. And I worked with lots of different interesting people. And I still remember one day in the late 80s driving out to meet with people from the city of San Diego and the municipality and the folks who were fascinated being able to do portfolio management of their bonds inside of spreadsheets. And I learned a little bit about the sell cycle, about 18 months and 36 months, and how it takes time for a city, for a county to issue municipal bonds. But once they do it, they have access to capital. And now we're in 2019, looking to 2020, 2021. I think that the municipalities that want to be creative, which I realize creativity doesn't always go with that term, but municipalities that want to do something creative in finance, where we can actually encourage residents of that town, of that city, of that state, of that county to invest and get more than just triple tax-free bonds, but actually are able to get, they get recognized at the local park. They get recognized or access to features that are taking place, at the museums, outdoor events where they maybe they get free parking. Maybe the city is going to give these people, they were an investor in their bond. We love these people, free parking for a year, some perks, all sorts of perks. There are lots of great things that we can encourage municipal bondholders to have if they invest in these bonds. And so it'd be great to see, whether it's in America or some other country, great to see municipalities forward thinking, issuing digital securities that reflects their future thinking. And it can and will happen. I don't know what the first city or town municipality will be that does it, but they will be that people that do that. And other people listening to this podcast will say, no, it's a great idea. Let's advise on this. Let's be the first to market this. And it's going to happen. It's inevitable. It's going to happen. It's the same reason why I believe we will see through the same type of digital platforms, many more companies coming to market with rewards programs, where right now all we're really familiar with are airline rewards mostly. And of course, people can buy prepaid services on Amazon and iTunes and with Google. And that's just the start of it. There are many economies to be fueled with digital cash, if you will, a digital something. It's just a matter of time, creativity, market access, and of course, ease of on-ramps and off-ramps. But it can all happen. And it just needs some people to pioneer it, to figure this out, and to be proactive in sharing their time, their vision, and their wisdom, and doing it hopefully in a proper way. And when that happens, we're at the dawn of something much bigger than any of us could recognize. I believe that it's going to be the financial institutions that historically have relationships with the cities and towns that will help them through that, guide them and help them through that process. There may be if you will, a application service provider offering that's doing it that's independent, but it would ultimately behoove the major banks and financial institutions to be able to do issuance. Not to say that somebody doesn't start doing it tomorrow, but it takes time. And who knows every law on how to be regulatory compliant on a municipality level for bonds? It gets complicated fast. So we would need to work with people that have experience, because there are, I think, several thousand counties in the United States. We know we have many towns, and so when you get into municipal governments, there are a lot of rules and regulations to figure out how to do it right, and where to do it. But the idea of giving perks to citizens is a cool thing. I think when I first had conversations about it in 2017, I thought this was the second coming of something amazing. And then I started thinking about, if it works for towns and cities, it probably works for large corporations. And it probably works for smaller ones too, ones with big, at least the brands that are recognized. And it's just a matter of timing. And then it's okay, you could visualize it. So if I was a sci-fi fiction writer, I would have these types of instruments in my books right now, because I can see it as a reality, even if it hasn't happened tomorrow. It hasn't happened yet, but that tomorrow will be, and it'll be soon. And it's for me that excites me. I get excited about the innovation inside of a highly regulated environment and trying to show regulators that not every entrepreneur is trying to break the rules, but if we could take away the lobbyists and offer direct conversations between the entrepreneurs representing a nascent technology and trend and put them in front of the regulators who are just trying to understand what's going on and take away the hype and hyperbole, we have a much greater opportunity to affect positive change.
Have you been following the crypto defense fund that the Kick Messenger platform has put up?
And I think that, there's people that are obstinate and people that are obnoxious and people that are righteous.
Yeah, it's hard to tell whether it's positive or not. I mean, it's sort of the idea of getting the SEC to clarify some things seems positive, but the way they're going about it seems like, you're poking the beehive, just trying to make everybody upset, and it probably is not going to work out in your best interest, in your token holder's best interest, or in anybody else who participates in the lawsuit's best interest.
Honey works much better than vinegar. So it's, again, I don't have a position in Kin, and I actually was a fan of the underlying company and what they were doing in messaging. I thought it was really cool. And the original idea behind Kin to create a token economy to encourage developers to come to their platforms. The real question is, how many developers are actively developing on Kick today? How many were committed to developing prior to the announcement of their token offering? And what does the projections look like over the next 12 months, 36 months? And where's that money gone? Is there an accounting for it? And what was their intention and purpose? And when they answer those questions, we'll know where the facts are. And if in fact this truly is a token economy because they were encouraging and continue to reward developers to gain access to their platform and to build amazing apps, wonderful. I have no knowledge whatsoever. I have not looked into or spoken to anyone who claims to be developing on their platforms. I do think that in the abstract, it is an interesting way to encourage people to build on my platform. If I'm looking to if I'm looking to have a currency that encourages people to build value, at least make it, so it's a win-win for everybody involved, so that the developer gets something, the platform gets something, and the end user benefits because there are more apps there. So I don't know where that goes, but
I felt like the apps that they had listed were all sort of the most generic ICO white paper type stuff that you could possibly think of. Like it's cloud storage, it's, all these sort of services there's 100 other companies in blockchain that are all trying to work on it. That was the only thing that was, to me, when I was looking into the project, I just thought it was a little strange that they didn't seem to be solving any new problems. They were just solving a bunch of existing problems that had 100 solutions already.
So it sounds like what you're suggesting is that they're basically naming types of companies that already made it, the generic company made it already as a unicorn. And they were trying to show that these are obvious apps that should be on our service too. I mean, one of the biggest challenges I think that the company had is that they had unicorn pricing prior to this whole idea of doing an ICO, and they were running out of money and they needed to raise capital. And I guess they didn't want to lower their valuation.
I think that eventually they're just going to look at what percentage of these tokens are being used in this utility marketplace that's been described.
If any.
And I have a feeling it's going to be, if any. I have a feeling it's going to be a lot of if any's.
So, but I don't want, whatever the outcome is of this particular offering, this particular company, I do think in the future, for those people that are thinking about creating ecosystems and incentivizing ecosystems where you build a platform and you have APIs and you like to find ways to bring developers on board, it's a nice perk to energize an ecosystem if you're creating value. Now, in the 80s, when I was running Spreadsheet Solutions, and I ran that in the late 80s into the 90s, the fact that Lotus Developer Marketing was inviting me to some of their customer events, that was enough perk for me. I figured out my own channels to build to sell my products through and to, and I had chances to coexist with Lotus, but I never asked them for money to encourage me to develop on their platforms, and so. It's a different type of ecosystem. I did market data integration. I work with real-time market data vendors, And, they support the developer marketing team supported the work of their developer community, but we were not getting tokens for it. We were making money because of it, that we saw a value in the ecosystem, which is why I invested as much resources as I could afford to both develop and market and sell into that ecosystem. And so it's the token economy for developers needs to be developed and proven. I'm just keeping an open mind that there are situations where it works really well.
Yeah. Another thing I think the SEC is going to be looking into is when the founders sold their tokens, because I have a feeling that a lot of them, having issued ICOs in 2017 and probably being security tokens, have probably run afoul of almost every investor provision for when C-level executives can sell their tokens or sell their shares in the company. So I have a feeling we'll be seeing a lot of that in the future. People inquiring exactly when, exactly how much.
Well, I mean, there's, in traditional securities law, and I'm not an attorney. I should say that at the beginning of the podcast. I am not an attorney. I don't play one on TV. I may play one on a TV show one day, but I'm not an attorney. I do believe that, but I am an investor. And as an investor, many times you're locked up and occasionally you're not. Depends upon what type of investor you are and when you came in. But most of the time that I invested early in a company, I had to wait 6 months, 9 months before I could sell. There were a couple of times when I wasn't locked up because the underwriters did not make it so that a certain class of shareholders had to be locked up, but it's usually fully disclosed in the underwritings. What you're getting at is that people invested in something which perhaps was a security, perhaps wasn't a security. And
even the way that the founders managed the money, if they didn't set up a foundation and they're running an actual corporation, they're selling their Ethereum that they raised during the crowd sale. They're also selling their tokens, and if the tokens were owned individually by the founder, then they probably have some disclosure requirements to the people who've already participated in the crowd sale. And I haven't seen any founders from any of those companies disclose anything.
Nice thing about government computing is they can figure a lot of things out that we cannot even imagine. But going forward, even if the past is the past and we just say, okay, we had good intentions, it did not exactly work out the way we wanted it to. Going forward, these are the recommended best practices you should follow if you're going to be doing what's currently designated and recognized as a utility token offering. And that everything else, you need to follow these rules for a security token offering. And if there's a gray area, call it a gray area. Perhaps there's a way to get a letter ruling and say that this appears to be not a security, but you want someone to say it to you so that you can have the confidence or don't go that route. Fear, uncertainty, and doubt, FUD, is one way to kill an industry. And it's also one way to kill a money center country. So if we create too much FUD in America, but other government regulatory authorities remove the FUD, you will find people doing token sales in those countries and perhaps excluding Canadians and Americans from those funds, from the opportunity to invest in these deals due to the FUD that these governments create both to the company issuing as well as to the investors. And so it's going to be a balancing act. And so there's going to come the uncertainty and the fear. I suppose it'd be nice in a future podcast for us to have an attorney join us so that they can correct us and we can use proper language when framing, because we're not sharing, none of us, neither you nor I, are sharing legal opinions here. We're just pontificating based on some facts, which are theoretical, alleged facts to different things, but we're sharing an opinion at least.
Yeah, and we can get a great class action lawsuit attorney on the podcast eventually. He's got experience. He did the Enron lawsuit, has sued Oprah, Billy Blanks, almost any company that you can think of that's had a class action lawsuit levied against them has been through this guy or the firm that he was working with. So he's a great resource for when he first saw the ICO industry. I asked him if they were going to be filing a lot of class action lawsuits on behalf of investors, and he said, "We're not sure if we can catch these kids running around the world." So there was that was his initial reaction was, I don't know, it's going to be kind of hard to get the money. But he's been following a lot of the regulatory stuff that's been going on. Even from the Bitcoin ETF, which has been brought up, for the last 2 years, pretty much. He's saying that until there's a daily fixed rate where they can pull the price of Bitcoin on the same way that they do for currencies, at that point they'll be able to do an ETF. But until there's that standardization of Bitcoin price, like if it's just coming off of 10 different exchanges that have high volume they're not sure if that volume is, real volume or if it's inside of the exchange. It's going to be an interesting time.
Well, and that's, again, I'm not in favor of class action lawsuits or the fear of them, but I am in favor of best practices, and perhaps there will be a true rating service like a Moody's, so that when people are considering different types of deals, which are not stock deals, which are not traditional, and none of this is public necessarily, these are all private companies, but to provide guidance at some level, it'd be nice to know which companies subscribe, and when they issue their deal, they say, we promise to blank, issue annual statements, issue monthly, quarterly statements, provide feedback on a regular basis to our communities, something, because there are a lot of deals I think that exist with their white paper and the people have become invisible and we just never hear from them. And others, and perhaps because to their defense, they don't feel like they need to because they've never been held accountable. Because
that's another, the people that don't think that they need to provide anything.
So there are different sides to it, and I am not trying to say that everybody must always share everything. Complete transparency doesn't exist in many relationships, but it'd be nice to know going into 2020 that if you're going to do a certain type of offering, this is what's expected. Because to the defense of the early pioneers of the ICO. They perhaps didn't know what they needed to do, because if they thought they were not a security, then they perhaps didn't think they had to do anything. And perhaps they were advised that if they behaved like a security, they'd be treated as a security. So there's the quacks like a duck, sounds like a duck, must be a duck theory. So perhaps, the folks that were the early ICOs are doing everything possible not to behave like a company that issued a security, because they don't want to be put into the box. Oh, you're disclosing. Oh, you're having investment meetings. Oh, you are clearly a security. So it just always bothered me that, if I actually had a proper ICO and my company was doing great, I would never be able to tell the public I'm doing so good, because people would think that I'm trying to pump up the price of my token, when in reality, we just had a breakthrough. We found a cure for cancer. We found this, we found that. We can't talk about it because it sounds like you're making future leading statements, which go against this law and that law. It's like, okay, fine. So we'll just be invisible. And it's so there are extremes here. And if we want to do stand-up STO comedy, I think we have a good platform to work off of. It's just
another guest, Jeff. We need to find someone who's contemplating an STO right now that just has a white paper idea. I'd like to talk to that company and that person.
Right. It'd be good. Look, I think that's a good time to close. We'll ask anyone who's thinking of doing an STO right now to contact Jake, and perhaps we could have a public conversation about why and where and how are you going to do it.
Yeah. Thank you very much, Jeff. I appreciate it.
Always good to catch up. Thank you.